There are some good deals out there, but like you said, there's a lot of dogs out there as well. And so you've got to wade through it, do your homework, and just underwriting a ton of deals will give you those data points to know what is a good deal and what is a bad deal.
Welcome to the Wealth Strategy Secrets of the Ultra Wealthy podcast, where we help entrepreneurs like you exponentially build wealth through passive income to live a life of freedom and prosperity. Are you tired of paying too much in taxes, gambling your future on the stock market, and want to learn about hidden strategies for making your money work for you? And now your host, Dave Wolcott, serial entrepreneur and author of the best-selling book, The Holistic Wealth Strategy.
Hey guys, welcome to another episode on Wealth Strategy Secrets. Our next guest is Gary Lipsky. Gary is a 20-year real estate entrepreneur and focused on multifamily syndication business. He's actually acquired over $250 million in assets, and he's also the host of the Real Estate Investor Podcast. One of the things I find really interesting about Gary is his forte around asset management. So today we're going to break down what is asset management around multifamily. How can you really optimize this to return, strong returns for the investor? So wait till the end until you hear all of his insights about how he breaks that down, how he can optimize and win. Hey, Gary, welcome to the show.
Dave, thanks for having me. Appreciate it.
Yeah, you bet. I've been looking forward to the conversation, Gary. And for folks who aren't familiar with you, can you tell us a bit about your background, how you really got into real estate investing and asset management and all the things you're doing today?
Yeah, absolutely. So been an entrepreneur my whole life. I owned a restaurant delivery service in college. Outside of college, where I co-produced 3 low-budget independent films. Then I started a company where we did after school, outdoor ed, and leadership development programs. And we worked with 90 schools daily, 9,000 students on a daily basis. So I had I looked at it as 90 properties throughout Southern California. And I sold that business at the end of 2016 and got into real estate full-time at that time. I had been investing a little bit. I had a single family home and I did a lot of research on neighborhoods for my own family, like where to live and schools and whatnot. So I didn't realize at the time I was educating myself on real estate until I got into it full time. And I knew I wanted to use my creative side, which I use for all of my businesses, particularly in the film business, and my business side of things. And real estate was a really good fit for me by using the both sides of the brain.
Yeah, for sure. And was there something driving you towards real estate with that you saw?
Absolutely. It was the ability to control my own destiny and not rely on others. Like I can take over a property, force the appreciation. It doesn't matter where the markets are at any particular time. If I'm adding value, that's still creating a lot of value that I can extract out. So I always wanted to be in control of my own destiny. And in the film business, I didn't have that destiny. If I was writing a script, I'd keep rewriting it and didn't know if it was good or not. And even if it was good, I had to rely on other people to want to invest in the movie, to make the movie, to release it, to, and ultimately get paid for that. So there was a lot out of my control. And maybe I'm a little bit of a control freak, but I wanted to be able to provide for my family and control my own destiny, and without having all these other outside factors to manipulate what I'm able to do or not do.
Yeah. Yeah, I find it so interesting how people have kind of grown. I mean, that's such a creative, how you make one choice in life that kind of leads to something else and drives it. But typically there's some kind of last straw, or some people are either, frustrated or excited, to take on an opportunity. But I really like that. That really hits home around, having more control over your financial future. And sadly, most folks are really outsourcing their financial future to, someone in Wall Street, right, who says, hey, I'll take care of this, right? And real estate investing in alternative assets is totally different, where you can actually completely have control and create more predictability in your life, which means, that's how you're going to actually be able to scale more. So that's pretty cool. Did you develop a particular investment thesis once you kind of got into the multifamily side and things that you were chasing?
Well, for multifamily, we knew there's a tremendous housing shortage and everyone needs a roof over their head. So, that really spoke to me. And you can look at the T12, or you can even recreate a T12 if an owner doesn't even have those numbers. And you've got economies of scale. So you can, to some degree, nothing goes perfectly, but you can kind of estimate where the numbers will be. And certainly we've always beaten our numbers, but you can lay out comfortably. There's enough history, there's enough information. You do this enough that it will tell a story of where you could bring it to. And you can look at a property and know exactly what needs to happen to help bring it up to that quality. So I feel it's one of the best risk-adjusted investments that you can make out there. No one's making a tweet and your property goes down 30%, 50% overnight. There's a lot of factors. There's opportunities in a good market, in a bad market. No matter what, there's always opportunity out there, and that's what I love about real estate.
Yeah. And so for folks, if you didn't catch that, T12 means the trailing 12 months of financials. And, you bring out another really good point, especially, we have a lot of entrepreneurs in the audience, right? And if you think about it, investing in multifamily, essentially you're buying a business, right? And we can buy businesses, and whether they be franchises, a tech business, Amazon e-commerce business, there's so many different businesses. And, I find that there's lots of variables, to most businesses. But if you get into, multifamily, just like you say, you have a trailing 12 months. You can look exactly at the financials. There's no hidden surprises. What everything is doing and how it's performing. And then you can say, okay, how can I then, optimize this, right?
Absolutely. So there's a property we have under contract right now. When we look at the T12, we knew that they have one extra employee on staff, which we don't need. We know that over, the course of all of our other properties. So that saves us $50,000. Then they had an insurance claim because their insurance bill was way too high when we look at other properties. So we found out they had a claim a few years ago. So they're paying $55,000 more than we'll be paying. Plus their water bill was more than 2 times higher than what we currently pay at our other properties as well. So we knew that they didn't have any low flow toilets. They didn't have aerators on their faucets and showers. So what that does is their toilet has 3.5 gallons per flush. And if we installed the low flow toilet, that's 0.8 gallons per flush. So massive difference. And so when you take these things and divide it by the cap rate, we're adding millions of dollars of value from day one as soon as we take over that property. So if we had that property under contract for $34.5 million, that we're really paying maybe $30 million now for that property, because we know that we're adding millions of dollars of value just from taking it over by looking at the numbers and doing a little bit of research. So that's what I love, that it's a lot less complicated than buying these other businesses. Each, like you said, each property is a business, and we have a team on site that runs it. I have a regional manager. And then we asset manage the heck out of that deal. It's that business execution piece to maximize the net operating income, so that when ultimately we sell, we get top dollar for our investors.
Yeah. And do you guys have a particular sweet spot of properties that you're going after, certain markets, certain class demographics that you've really, narrowed it down to?
Absolutely. There's riches in the niches, ever hear that saying? So we focus on a few markets so we can be experts in those markets. We can't do the shotgun approach. We'd rather build great broker relationships, have thousands of data points by underwriting a ton of deals in a couple markets. And for us, we've done all of our deals in Arizona so far, Phoenix and Tucson. We've been looking in Albuquerque and Vegas and the suburbs of Denver for a year and a half, accumulating data points. But, I'm based in LA. I've got some of my staff in Phoenix. We can't be experts everywhere. We can't be, there's plenty of markets I like in the Southeast, but that's just too far for us to be there on a consistent basis. So, I can fly into Arizona, take a 6 a.m. flight, visit all of my properties, and tour 5 new ones. If I'm looking at deals, have lunch with a broker, maybe a drink with a broker, and have really strong relationships. So when something comes about, I know right away if it's a good deal or if it's not, because we've been honed in on that market. And we also focus on value add multifamily. So we're looking for deals that workforce housing. It's your not that class A super nice property. There's a lack of workforce housing. They make new buildings for that top buyer or top renter, but they don't make new stuff for the workforce housing person out there. So we fix it up. We provide nice value for them, and they're really proud to live in our properties.
Yeah, makes sense. And I know there's a lot of pros and cons to some, workforce housing, right? What would you say? I mean, some people on the downside, right? People talk about that as like, okay, it's a tenant that could be potentially rougher on the properties. So you've got maybe more maintenance charges, things like that. Also, they have a lower income. So if they lose their job or something, it's not like they have savings to keep the rent going. So how do you kind of approach that?
Yeah, absolutely. So in the past, we've had some rougher properties, C class that we're trying to bring up to a C plus. So you're gonna have a little bit more delinquency. It's going to be a little bit rougher on the staff too, because they have to deal with some issues. So you're going to have more turnover. But we've moved into, like, if I could bring a C plus to a B or a B minus to a B, like the B is where I want to be, basically, because it's a little higher income level. They might have more savings, like you said. If we hit rough times, an A may fall down to a B class. So B is a really good space. You might have less issues, less damage on if someone leaves. So we like to be in that space. So maybe it's a C plus property in a B neighborhood, and we can buy at a discount and bring it up to where it should be.
Yeah. And Gary, what's your take on the market right now? Obviously, it's been a super interesting year in the industry, primarily driven by the interest rates, right? So what are you guys seeing, right? Have you been able to, is that gap between buyer and seller starting to close? Are we getting any certainty with interest rates and being able to do underwriting to put together deals that are making sense now? Or?
Yeah, so I would consider myself a little bit more optimistic than most others. So the deal we have under contract now is we'll close. It'll be a year between our last deal, and so the buy sell gap was real, because we hadn't been finding something. We've been putting offers in, but our gap was a few million on stuff. So, but I do feel like it's a great time to buy. I know people are worried about interest rates, but we'll probably have another 25 bips, rate hike in, maybe it's November, maybe October, but that'll probably be it. We're looking at going into an election year. The Fed has so much debt they need to refinance. They'll have to print money. They'll have to lower rates. There's just a lot of different things that need to happen. And most likely something will break by then too, that they're going to have to make a switch. And I think the Fed is scared to say, hey, this will be our last hike, because then excitement will happen and the markets will take off, and there'll be this frenzy, because there's trillions of dollars sitting on the sidelines. So they have to be very, very careful on what they say. But I feel like this is a really good opportunity to buy. We're seeing things 20-25% discounted. There's not a lot on the market. Like, I'm not a seller right now. I'm a buyer. I don't want to sell any of my stuff until a couple of years from now, when things really get rolling. But I think there's a really good opportunity ahead. You're going to see some distressed deals, not a tsunami like people are talking about, but people are having a hard time covering their debt service, and some of those loans are coming due. So there'll be opportunity. The office space may, there'll be a ripple effect, because a lot of those loans are coming due too over the next few years, and there might be some banks that that go under because they've had so much office space loans that they're going to be hurting. So interesting times, but if you're an investor, make sure you're investing with someone that really understands the market, underwrites conservatively. I know everyone says that, but to really find out what their cash reserves are as a company, their net worth to help, if that they can cover a capital call. Because when I talk to a lot of investors, they're frustrated that they've invested in a bunch of deals and they've got capital calls, and the GPs, you just don't have the liquidity to help cover some of these things.
What if everything you thought you knew about investing was wrong? Would you like to create a wealth strategy like the top 1% have and get exclusive access to top private equity deals that provide downside protection, tax efficiency, predictable cash flow, and have a lucrative upside? Discover how with the Pantheon Advantage and join our investor club today at pantheoninvest.com.
Yeah, that's a great point. And it's one of the things we look for in operators as well, is having a strong personal balance sheet as well, as long as that, as well as the reputation risk, right? Maintaining your reputation and not having capital call, I think is really critical. And what do you think, Gary, as well? I mean, a lot of the deals that we're looking at, I mean, it's pretty interesting because we're kind of really going deep in terms of the underwriting, the analysis, and we're having a hard time just really finding deals that are like good that we want to bring to investors. We're seeing much more of an increase in deal flow this quarter. So lots of deals out there. And even if there are some discounts, I still think we're overpaying for some of these things. And the thing that's really getting me as well is that the cost of these rate caps are huge, right? And I think a lot of investors don't really realize this, and that goes directly out of the equity that's raised that can't go into, value add, right?
Yeah, on this current deal, I think we have like 20 different models on all the different loans that, we could have picked, and so we look at, our business plan and what's the best fit. So yeah, finding the right loan is really hard. You're getting less leverage, higher rates if you need a rate cap. So it is difficult to find a good deal. It's a range out there. So I go back to my current deal. It's just under 135,000 a door. We have a comp that's a C- property that was almost a 150, and the broker also sent us a deal that was 175 a door. And both of those other properties were like junk compared to what we had. So it all depends on what the seller is, if they need the money to, maybe they need the liquidity, or, they're underwater, like what's their motivation is to find those deals, because there are some good deals out there, but like you said, there's a lot of dogs out there as well. And so you've got to wade through it, do your homework, and just underwriting a ton of deals will give you those data points to know what is a good deal and what is a bad deal.
Right. For sure. Gary, I know your forte is around asset management, and, we haven't really delve too deeply into asset management on this show. So I think this is going to be a great opportunity, for LPs to really kind of understand asset management. So let's just kind of break it down for folks, right? And talk at a really high level. Once you take over a new acquisition of a property, what are the typical, asset management activities that go on?
Yeah. So an asset manager basically manages the manager. So whether you have in-house property management or outside property management, they don't own the property. So you've got to manage them and set expectations really high from the beginning. They need to know where the bullseye is, as far as, we tell them we're going to secret shop the property, meaning we're going to call about rents. We might do surprise visits, and not to catch them doing something bad, but we want to catch them doing something good. We're going to go through the financials with a fine-tooth comb, because we want to understand the financials. And there are times when people make mistakes. An accountant can manage 10, 15 properties and allocate a charge to a property, to the wrong property by mistake. They're not trying to do something wrong, but we've caught that before. Expensive mistakes. We're also the asset manager. really manages the execution of the business plan. So if you're going to renovate 50 units in 2 years' time, you want to make sure you're on track. You've got to manage that CapEx tracker. As an asset manager, you also have to communicate to the investors what's going on, what's going right, and what's going wrong. And if there's what's going wrong, what's the plan B and plan C to fix that situation? No investor expects everything to go perfectly. That life doesn't happen that way. But you've got to have a plan. And if something is a struggle, then double down on that communication. So maybe it's you report once a month. But if something maybe you had a bad insurance claim or something, then you got to communicate 2-3 times a month and let them know what's going on, at least from the very beginning. So that's really important. And if you do that, your investors will keep coming back each time. And a good asset manager could make a bad deal good and a good deal great by getting a few extra points in occupancy out of your deal, which can mean, $50,000, $100,000 a year, and then you divide it by the cap rate, and now you're talking. It could mean millions of dollars to the investor at the end of the time when you sell your deal. So it's really important to have good asset management because that goes a long, long way. And I know people are kind of just starting to talk about it the last 6 months, but if you have good asset management on a deal, that's a game changer.
Yeah, for sure. And what do you think about vertical integration versus having it outsourced? Right? What are your thoughts on that?
So I'm a contrarian. I know a lot of people want to have it in-house. So my old business, like I was talking about, I had 700 employees and probably about 700 independent contractors, and it was an HR nightmare. I don't want to do that. I want to run business and find good properties and asset manage the heck out of it. So I use third-party property management. So in Tucson, I have a company that they've been doing it 35 plus years. They're only in Tucson. They know that market. They've been doing it forever. So I can rely on their expertise in that market. And if I don't want to stay in that market, I can move to another market and find another property management company. So I'd rather be lean and mean and not be vertically integrated. They're not perfect. If I had my own company, they're not going to be perfect either, but I can figure out the gaps of what they're maybe lacking and try to fill in those gaps as well. And it allows me to be more nimble and focus on what we do best as well.
Yeah, good point. And can you give a couple examples of some, asset management strategies that are, core to what you're doing and really differentiate you guys?
Yeah. So one of the things that we do is, the property management sends us a report. It's like 18 pages. Some of the pages are sideways. So it's a PDF. It's hard to track. So we have a Google tracker, no cost. Everyone on our team can see it. We have a tab for CapEx so we can track everything. We have a lease tracker so we can track all the new leases. We have a task tracker. So anyone that's assigned a task to do it, who's assigned to it, what is the task, when should it be done? And so we can go back and each week see it right there for everyone to remember. And then each week we have our set of KPIs for the property. So I can go back 2 years, 3 years, whenever I want to see where we stood at any one point for delinquency, for occupancy. And it gives us all this data right there on one sheet. I don't have to, flip it sideways or whatnot. Right. And that provides us with a ton of data, the whole team, so we can save time and make good decisions based on that information.
Yeah. And any examples of some, ahas or insights you've gotten from this data that you've been able to, optimize?
Yeah. Obviously for leasing, you need to break down every type of unit. We're not looking at it as a whole. So, we could see that, maybe there's certain types of units that haven't been rented in a long time. So we can just lower that price just a little bit. But the other ones that are filled up, we can raise the price 10, 20, as much as we can until we start seeing some vacancy in there. So I think those things, like just tracking and breaking down all the data is really important. And then comparing it to your other properties too, that will give you some aha moments. Maybe one property is at 90% occupied and another property is 95. So what are those factors? Is it the property manager? Is it the location? Is it the pricing? And so it just gives you a lot of information to make better decisions.
Yeah, those are some good insights. And I think not enough operators out there are really focusing on asset management. You could throw a dart probably in multifamily in the past, decade, right? And there were just so many winners, right, based on the market. But now having that strong asset management is really critical to optimizing the asset, delivering on the pro forma, right, that's promised to investors. So really appreciate that approach. I think that really makes sense. And Gary, from a personal perspective, if you could give just one piece of advice to our listeners about how they could accelerate their wealth trajectory, what would it be?
Yeah, I think planning, having a plan, because people will spend a lot of time planning a vacation, but when it comes to looking over their net worth and where they're investing in money, I'm kind of shocked by the lack of tracking of people's investments, and to know if it's getting the returns they expected or not. And if it's not, then you need to make a change. So I think having that consistent checking in on every quarter, basically, on your investments to see what's performing and what's not is super important, because you want to accelerate your investments and have your money earn money for you versus just sitting in the bank making 4%, if that, and investing in great risk adjusted opportunities.
Yeah. There's so much to be said for that. Running any business and actually being an investor is like running a business, right? You're really the CFO, right, of your personal economy. So managing the data to be able to make informed decisions about whatever it is, cash flow, growth, tax efficiency, things that you're looking at. But absolutely, data points are critical. So concur with you there. Gary, really appreciate you coming on the show today and sharing your wisdom with folks. I think that's been really helpful to really unpack asset management and how you can kind of optimize these assets and really some information about the market. If people would like to connect with you or learn more about what you guys are up to, what is the best place?
Yeah, go to breakofdaycapital.com. You've got all of our social media channels. You can book a call. You can see what deals we have. We have passive investing resources up there as well. So that's the best place. It's got a ton of information.
Awesome. Thanks so much for coming on, Gary. Appreciate it.
I appreciate it, Dave. Thanks.
You bet.